All right, let's talk about what's really going to move Bitcoin's price this week. And here's a little hint for you. It's probably not the thing that everyone's obsessed with, which is the inflation numbers. So, what is it?
Now, seriously, what's the one piece of data that could either stop Bitcoin dead in its tracks or be the fuel for the next big rally?
Believe it or not, the answer is the U.S. labor market. Yeah, I know it sounds a little weird, right? But this week, the number of people getting hired or maybe losing their jobs could have a more direct impact on your crypto portfolio than almost anything else out there.
Okay, so how is that even possible? Why on earth should someone holding Bitcoin care about American jobs data? Let's break it down.
Well, it's all because the job market has become this incredibly powerful macro signal. These are the big economic reports that the Federal Reserve watches like a hawk when they're deciding what to do with interest rates. And right now, you could argue that jobs data is the most important signal of them all.
The logic is actually a pretty simple chain reaction. Look, if the U.S. job market starts to cool off, that eases fears about inflation. And that gives the Fed a green light to think about cutting interest rates. Lower rates mean more cash, more liquidity, sloshing around in the markets. And when there's more liquidity, investors tend to get a little adventurous and buy into riskier assets. Like, you guessed it, Bitcoin.
Okay, so keeping that chain reaction in mind, let's look at the week ahead. You can think of it like a four-part mystery, with a brand new clue dropping almost every single day that's going to give us a clearer picture of the economy's health.
Our investigation kicks off on Tuesday with something called JOLTS. That's followed by the ADP report on Wednesday and then Jobless Claims on Thursday. And it all leads up to the big one on Friday, the official employment report. So let's dive into that first clue.
So our first clue lands on Tuesday, and it's the JOLTS report. This basically just measures job openings. Now, the trend here has been super clear. For months, this number has been dropping, falling from a high of about 7.8 million all the way down to 7.2 million.
So, what are we watching for? Well, economists are expecting another drop to around 7.1 million openings. If that number comes in at or, even better, below that, that's a really strong signal the market is cooling. And as we just talked about, that's bullish for Bitcoin. But an unexpected jump, that would be seen as a negative sign. Okay, next up on Wednesday, we get the ADP report. This one gives us a really broad look at hiring in the private sector. And just like JOLTS, it's also been trending down. The market is actually bracing for just 40,000 new jobs.
And this is a perfect example of that whole bad news is good news thing for crypto. See, slower hiring would confirm that the demand for labor is softening, and that pushes the Fed just a little bit closer to cutting rates, which is exactly what Bitcoin bulls are hoping to see.
Then on Thursday, we get the weekly jobless claims. This is a super direct number. How many people filed for unemployment benefits for the very first time? The expectation is for a little increase from 218,000 up to around 228,000.
Again, I know it sounds totally backward, but a higher number of people filing for unemployment would actually be seen as a positive for Bitcoin's price. Why? Because it's another clear signal that the economy is weakening, and that just reinforces the argument for the Fed to ease up on its policies.
And that brings us to Friday's grand finale, the official employment report. This is the big one. It's the most comprehensive, most watched release of the whole week, and it tells us two key things: how many new jobs were created and what the overall unemployment rate is.
Now, this report is a little more nuanced. The market is expecting a small bump in job creation, up to 45,000, with unemployment holding steady at 4.3%. This kind of result would signal a market that's still resilient, but definitely not overheating. For Bitcoin, that's actually seen as neutral to positive because it keeps that hope for future rate cuts alive.
So, after looking at all four of these clues, what's the big picture? What does this all mean for crypto traders this week? Let's put it all together.
Here it is. This is your cheat sheet for the week. For those first three reports, JOLTS, ADP, and Jobless Claims, weaker than expected numbers are a good thing for Bitcoin. And for Friday's big report, just hitting the expectations would be seen as neutral to positive. Basically, what the market is looking for is confirmation that the economy is gently, and I mean gently, slowing down.
So it really all comes down to this. The entire narrative is banking on a cooling labor market, giving the Fed the wiggle room it needs to cut rates. And that potential flood of new liquidity, well, that's precisely why crypto markets are so laser-focused on these job numbers right now.
And so that leads us with the big question.
We've got 4 days of absolutely critical data coming our way. Each and every one of these reports has the power to shift the entire market's expectations. So, will this be the week that the economic data finally lines up just right and gives Bitcoin the push it's been waiting for? Well, we're all about to find out.